And we're going to turn on our monetization. I'm late today. First up, I apologize for being late. To quote Jim Cramer, the hubris. I am sorry. The hubris. Okay, I'm live. Let's hope this shit doesn't crash. Let's get this shit started. Let's get it started. Let's get it started. Let's get it started. Nobody wants to hear that. But I'm over my food poisoning. I don't know if anybody said I still have hives from the vaccine. I don't know why. But if I took my shirt off right now, you'd see your boy's got some hives. Morning, Scott. And I've got some stuff here. Oh, let me see. The spaces went so well. I'll be on a few times next week with Wolf Financial. Bring it down? What do you want me to bring down? Is it loud? I recorded something this weekend. And so hopefully it's not like super loud. Maybe it is. I don't know. Let me see. I'm going to pull this up on YouTube. View your channel. We'll go over here. Ooh, I got an ad. Daddy's getting paid. No, it sounds okay. Oh. Yeah, my singing sucks. Just in case anyone knows, I do not sing the theme song. That was in question before as well. Do I sing the theme song that is on the podcast? No, I do not. Let me see. I got to turn this around a little bit. There we go. And I don't like the way this is standing. Well. Oh, well. It's kind of crooked a little. We're going to bring that up. Dun, dun, dun. Okay. Boy, the screen looks horrible the way I'm looking at it, but oh well. Anybody get into Tesla? Because it hit that 250. And we're going to post that back there. And then scans. Because I was off for one day, you mofos hit me up with so many questions. And I think I've gotten a bunch of new folks from the spaces that I was on. I got a lot of new followers on Twitter. I don't know why, but it went well. Look at the core portfolio. QQQ. We got Taiwan Semi. We've got Microsoft. We've got Simon Property Group. We've got Qualcomm. Look at this. QQQ crossed up again. I said it was getting ready to go. See how the MACD is setting up again? That RSI, man. I'm not buying up here, but I mean, we're going to 500. It's a little bit nerve-wracking. And I tell you, I wasn't a big bull on this one. Again, I said I'm not buying it, but I got exposure through XLY, so I'm happy to sit by and watch it. Yeah, I almost sold out to that 170 mark, just thinking it's not going to go anywhere. There's no catalyst. I will say, I don't think there's 300 in it if it wants to, but God, I mean, that would be scary for me to hold on to it. VRT, we've got QQQM, AVGO. We got a bump there from Nancy Pelosi. IGM, I still own a bunch. Microsoft, I've got. Breaking news. What is this? June non-farm payrolls. Oh. Let's see. Bitcoin and crypto ETFs. Bitcoin crashed. We'll go over that one. WGMI. What is WGMI? Bitcoin miners. This is down 9%, by the way, but it got across. I'm not going to include that one. Nobody wants to see that on a day like today, and I do not want to lead someone into Bitcoin over a weekend. Covered calls. I did not, AJ. I told them that I would be monitoring it, but here, if you look at Tesla, so I try and use the 4-hour algorithm since I'm talking about Tesla. I'll talk about it more in the podcast, but just to give you just a quick overview of Tesla. I identified kind of 250 as the next resistance level, and it's bumping up right against there. I mean, we're at 251. That 253.29 is probably going to be a significant level. But the reason I didn't trim my parents' Tesla position, and by the way, kudos for listening to that one, remember it. I was going to trim at 200. But look at that strength at 200. I mean, there was no reason to trim at 200 when you've got that strength. Now, you do have a gap here on the 4-hour between 212 and 216. If you move to the daily, which is what every other algorithm is going to look at, you've got a gap here between 213 and 217. So in my mind, you just moved the support level to this gap at 220. So I will probably start to trim that one. Now here on the daily, I mean, we don't see the 250, but you see this gap up here between 288 and 281. In my mind, is that, you could look at this one at 265 as a resistance level. 250, I think, starts the resistance level from a while ago on that 4-hour. Let me see if I can pull it back here to see where the 250 really starts. Because I know it breaks through a bunch of times. Yeah. So it starts right here, kind of, and it did hit 260 in this area. So maybe that line is maybe a little bit low. But in my mind at 250, I want to start taking a look at does this have more legs to run? Because again, we're in a weekend. Here is the all-time highs is this the all-time highs? Let me see. We're going to have to go back to weekly. Is 300 the all-time? I think 400 was the all-time high. Yeah. 414 was the all-time high in 2021. That 300, which is right about here in 2022, you got to about 350. The valuation makes no sense whatsoever. But when you look at this weekly, look at how low the MACD is right here. And we talk about it all the time. Momentum is so key in a market like this, that momentum could take this thing like much higher. But, I don't know. It'll be interesting to definitely see where it goes. But I did not trim my parents' position. I told them I would manage it, and I am managing it. Now that we've hit 250, if next week we start to pull back a little bit, because we're coming up on that August 8th, I think they have earnings, and then they have August 8th. And the August 8th, date is going to be if Elon comes out. And let me make this one clear. Covered call ETFs. If Elon comes out with, we think it's going to be this, we think it's going to be that, and we think it's going to, we have a timeline of, next year. That either extends the rally because he put it in terms of we have a timeline of next year, or it completely crashes the stock because he's not got no kind of, whatever. Yeah, Taiwan Semi is a good one. I brought that up. I remember, on the spaces, everybody was bringing up NVIDIA and AMD and all of this stuff. I said, you guys are all talking about the actual chips. what about Taiwan Semi? And everyone was like, no. I think it was Muhammad who finally said, Taiwan Semi looks really good. ETFs, we've got some good ones here. TQQQ gets another cross up. XBXL, TECL, which is the tech sector, HIBL, which is the S&P 500. It's all up. I mean, this is all up. TQQQ, I hope people bought this one. If you're not as invested as I am, this was a great play. This was a fantastic play. Leveraged ETFs. Let's go to low cost Vanguard. We'll probably have a couple in here. Yeah, we got quite a bit. Low cost ETFs. VYM, VWO, QQQM, SPY, VUG, VB, and QQQ. Boom. Let's go to spider sectors. I think we have XLK, XLRE. Spider sectors. XLK, XLRE, XLG. XLG crossed up. That's a nice one. I may have to add more for my parents on that one. Let's do the watch list. We probably got a ton in the freaking watch list. Yep, we've got a bit. We're going to go. We already have VRT because I bought VRT. Yep, we've got that one in there. So I've got that in there. EQT, we have POWL, BLDR, Trading Desk. Trading Desk, it up over 100. Scott, you're killing it on those. I mean, way to have the cojones to buy into the bull market. And you know, people may, I think I got somebody who said, why didn't you, they emailed me. And they said, you said to buy TQQQ, but you didn't buy it yourself. Well, don't follow me. Don't follow me, first off. Second off, I've got only about 5% cash in my account. So don't tell me that I'm not taking advantage of it. I'm participating in the bull rally. And just because I say, hey, strategically this makes sense, but I'm not doing it, doesn't mean I don't have confidence in it. It's just like, hey, I've got my own strategy. You should have your own. That's kind of the way it should work. It doesn't always work like that, but PDD. Morning, Chris. Morning, Laurel. Let's go to the S&P. And then I'm going to start the podcast because I'm already late. I did do, just by the way, I'm going to buy more. I mean, I have a social question about Bitcoin and why I bought it and where I'm going to get rid of it and blah, blah, blah. Blake, I've got a question about NVIDIA. Blake, overall, just buy it. I mean, Blake, just buy it. I'll go over, if you wait for the podcast, I've got a social request for NVIDIA, and I'll go over the valuation and stuff. But overall, just buy it, Blake. Just buy it. I mean, here's the thing: if you're looking at today or next week, NVIDIA, it may not make sense. It is absolutely crazy the valuation that it's gained in the past 6 months, 8 months, a year, whatever. The valuation for it to become like the 10th largest company to the first largest company in the world as far as market cap, it beats Germany. I mean, it's just got a crazy market cap. That's the worry, but the valuation is there. And so the valuation, as they continue to perform earnings, the only thing you have to worry about NVIDIA is some type of, Google, Microsoft, Amazon, one of those CTOs coming out and saying, hey, we've got enough compute power. We're going to cut back our capital expenditure. But, Meta, Zuckerberg, with his douchebag. And here's the douchebag thing I have about Zuckerberg posting these July 4th kind of He always is in the water. Yesterday he was in I think that was actually filmed in the Maldives. It might have been Hawaii, but the rumor is it might not even been the U.S. So, again, hey, it's great. I think Zuckerberg is a fantastic, fantastic genius when it comes to Facebook and monetizing it and putting it out there and being a great leader on that side. I really think he is. But when you're that rich and you're doing that douchey shit, and you've probably got people around you that commend you for stuff like that, all I want is for somebody that rich to come out with a nice headshot, just a single shot. Maybe the family's there. And he says, I just want to make sure that everybody knows that the United States of America, the greatest country, has allowed me to live this life and to gain beyond my wildest dreams and to be able to have the freedoms that I have. We're going to protect your elections. No matter what side you're on, we're on your side because we're all united. That's what I want. Not a douchebag surfing to, holding an American flag, drinking an energy drink or something. I don't know what he was drinking. I don't know. I'm sure there's a market report out there about what he was drinking and probably stock is up. Maybe it was Celsius. Maybe he was drinking Celsius. I don't know. But that's the douchebag. All I want is somebody who's a little bit more reserved and not flashing their wealth. Bezos flashes his wealth. Elon flashes his wealth, but Elon's a little bit more reserved about it in that he flashes his wealth by building other companies. Okay, QQQ. Let's open up some of the links that I have. First off, this is a great thread on Bitcoin if you want it. It's going to be in the newsletter. The newsletter will have this. And again, why is Bitcoin dumping? Mt. Gox ETFs halving, Germany, and much more. Full analysis. I liked this one. The entire thread was fantastic. Mid-year review, VanEck, their crypto predictions for 2024. They go over what they predicted. A lot of that crap is actually coming true. Listen to articles. I don't want that. Oh, that's new. Bitcoin is slumping below 58,000 for the first time. That's that one. We got NVIDIA. We got UiPath. I've got SMCI in my thing. A couple of Steve Burns quotes that I'm going to go over that I thought were good. Google is a winner. DeepMind, or not deep fucking value, but deep water. They did a benchmark survey, and Google came out ahead. That's an interesting one. I'll go over what a granny shot stock is, according to Tom Lee. And Charlie from Zip Terror to You just did a video about the granny shot stock that Tom Lee is probably referring to because he said it a bunch of times. This is Nancy Pelosi's trades, most recent trades. So if you want to follow her, we're going to go over the biggest movers of the day. Here's crypto stocks and more. Macy's is up because they got a new bid. U.S. job growth. And let me just pull up Twitter again because Wolf Financial, those guys, I mean, they hosted a good space. I was more impressed by the spaces that I was on than other spaces that I've been on. Oh, NVIDIA gets a downgrade. Look at that. Let's go to Seeking Alpha because I want to see that alpha. That's from 9 minutes ago. Let's see if Seeking Alpha has it. Seeking Alpha is not the best at breaking news, but they get it right. Let's see, NVIDIA. It's a hold in the quant, so no, they don't have it, but we should probably just, you know what? I'll retweet that and copy link. I'll put that down here in the NVIDIA. Okay. And then I'm going to bring this back. Let's see. That is going to be... Yeah, that's going to be right there. We'll open up Twitter. And I'll open up with Wolf. Wah, wah, wah. Squid's pulled an all-time fast one on Wendy Peppercorn. Let's go. Wolf. These guys. Wah, 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 wah. I think he's got me listed. Yeah, he's got me. Oh, this was last week's that he pinned. He hasn't pinned next week's. But I'm going to be in a couple of them. I'll be in a couple of them. Okay. Let's pull up the Qs, and we got the Qs. The Qs. Morning, Daniel. LOG. What the hell is LOG? Is that a stock, Lucas? Good morning, by the way. I don't see LOG. I see Logitech, but we're going to pull up Qs. Roblox is going over 40. Have I said that before? Tesla is at 251. Shopify is going over 80. Let's see. What's down 1%? Nvidia is down. It's been pulled down by that downgrade. Boeing at 184. Again, anything under 200, I think that's fine. Cleveland Cliffs is climbing back up slowly. Costco at 862. If they get a membership increase, God, they're going to just soar. Coke at 63. Sell it because it's over 60. Eli Lilly is under 900 again. Alert, Eli Lilly is under 900 again. Microsoft at 460. That's all-time highs. Occidental at 62. You can sell it over 60. Pepsi's one. It's been a little bit weak. Palantir 25. Again, 25 is your support level. Qualcomm seems to be hovering around that $200 mark. Simon Property under 150. I think it's a good buy because that's a really good dividend and just a stock that, I mean, you know, outlet malls ain't going anywhere. Taiwan Semi's up 1.2. United Health under 500. You can buy it. Walmart is a buy. God, anytime you want to. Exxon, it's probably going to 120. It's at 114. So there's your look at the core portfolio just from a glance at some of the stuff. Okay, let me Okay, I'm going to start recording. Legend of Gary. Oh, yeah. Boy, I tell you what, Lucas, I was on that Spaces, and I am by far, I'm double the age of most everybody on that space. And I was like, listen, I'm retired. I've got a good portfolio. I came from just where everybody else came from. Average kind of worker. I'm not smarter than everybody else. I just, was a little bit more aggressive than most in my portfolio. And I've been, blessed with a bull market for 40 years now. Well, at least 25, 2000. Even before that, it was a bull market. But again, blessed with a good bull market. We're probably having a good bull market again. Everything seems to be fine as long as China stays out of Taiwan. But my point to those guys was it's not hard. And what they were ogling about was my trading portfolio on Savvy Trader. And I said what's even better is the core portfolio because it's just 35 names, 100 shares of each. And it's outperforming. It's doubling the S&P. It's not even a solid, logically, that should not be a portfolio that anybody actually has. You should be weighting your winners. Again, we talk about watering your weeds and making sure that you let your winners run. Let your winners run. I sold 900 shares of NVIDIA. I shouldn't have. That's going to be a clear winner going forward. But again, managing that portfolio of just equal weight, it shows that if you have a strategy and you put it in place and you make sure that you have something, you can do great things. I mean, that's what it is. So I was trying to talk that up. I just don't think these guys who are doing 0-day options, and I just don't think that they listen. But I got invited back, so yeah, let me go and talk about it. Okay, I'm going to start this. Good morning. Happy Friday. It's July 5th. I hope everybody saw Mark Zuckerberg being a douche. Love the meta stock, hate the douche behavior, but he is a fantastic leader. Do not doubt that he is a good leader of that corporation. I hate the douchey behavior. I just hate it. Just hate it. Talking about douches, I was that douche on the internet. What was it? Wednesday before the holiday, I was on Spaces on Twitter with Wolf. These guys have 335,000 followers. I got a couple thousand followers, I think. A bunch of new people. So welcome to the new people if you're listening. Welcome. I will be on more Spaces next week. It went so well that they invited me back. I didn't use Haktua. I didn't use half the jokes that I had planned. But I did say I broke my hymen, and I hope I didn't bleed all over the place like a little virgin. But again, the jokes were there. They were there if you listened. But let's talk about the stock market here. Again, the Spaces went well. I will put in the newsletter when I'll be on these Spaces. I think it's going to be Wednesday and Thursday. Wednesday might be a little bit late for that one, but Thursday I think I'll probably be on it. And they haven't told me what I'm talking about. But now that I know it, I'll become more prepared. I'll give you guys some stock tips. I'll give you some macro stuff. I'll give you whatever you want. And if you have any questions, again, hit me up down below. That's part of the thing. Let's talk about Qs, okay? The Qs are at 491 in pre-market. 491. We've talked about the entire way up the support level being at 450. We've talked about the support level being at 460. We talked about the support level being at this gap at 470. We also talked about with this pullback, the gap being at 480. We've every level, every single major second digit in this, we've talked about that support. 490 is where you're at now. Now, I want to point out, we got to 480. It looks like 486 back here on June 20th. And the MACD was enormously high. It had to come down. And it came down. And what did we do? We're crossing up on the MACD again. Our RSI is at 73. The last time the Qs were up here, the RSI was at 82. Do you have more room to run? Yes. Today, most likely, because of the jobs report, we'll go over this, but because of the jobs report, most likely this is going to continue to run. Things are good. Yes, our president may not be able to drive a car. He's the grandfather that you want to take the keys away from. And we've got a criminal who's actually running on the other side. So things are bad, but look, things are good. And so we talked about, if you guys are longtime listeners, I always talk about good news is bad news and bad news is good. And when that turns around, that's when this market starts to take off and things are starting to turn good. How do we know things are turning good? Well, the U.S. job market, again, it edged down in June. So how do you conquer inflation? For inflation to go down, the consumer has to spend less. How do you get them to spend less? You get them in fear of losing their job. If there's no fear, if we've got a 3% unemployment rate and they can go out because there's so many jobs out there, they're going to spend like there's no tomorrow. Again, there's two types of people in this world. There's savers like me, and then there's spenders. I don't spend. So I'm not a great example of this roaring economy. I still have a broken TV in my living room because I want to buy the perfect TV. I can go out there today and probably buy a TV and be perfectly happy, but I want to buy the perfect TV. So for 2 weeks now, I've been watching sports and stuff with a broken TV. I am not this guy, okay? That's just it. But how does Jay Powell do this? He has pulled off a fantastic soft landing. What this means is there could be rate cuts. And again, the market is pricing in a September rate cut. But because things are going so well with the job market kind of leveling off here at about 4% unemployment and inflation coming down, we may see it sooner. You might see it in July. But if you start to see rate cuts between now and September, that means something's breaking in the economy. So again, bad news, good news will be bad news. Once we get to the point where good news is good news, holy crap, you're in a bull market. We'll talk about that more later. Biggest stock movers today. Macy's got a bid, so they're up about 3%. But the biggest thing, Bitcoin. Bitcoin is under 60,000. It went to about 54,000. I mean, we can look at it here in Seeking Alpha. Bitcoin here, let's see. It is down at 55,262. We'll go over it a little bit because I got a social request because I did buy iBit and they want to know what I'm doing with it. Blah, blah, blah. We'll look at it. KOSS. This is one I didn't even look in Seeking Alpha. I don't need to look in this one. If you're trading and you're in the market for a highly volatile name, I would urge you. KOSS is now the new meme stop. It has taken over GameStop. CHWY is not it. This is it. If we go and we look, let's look at the 5-minute A+ setup on the algorithm here in TrendSpider. This comes when you sign up for TrendSpider through me. You get this A+ setup. Let's take a look. Did it get you in? Yes, it got you in here. Oh, this was on Wednesday at $5. You were in right before the run. Again, it's an A+ setup. A+, and it got you in. Hasn't got you in again. I would be a little bit worried. This looks like a double top here at 15. Again, this company is not worth the price. But if you're looking for something volatile to trade and this A+ setup works for you, have at it. You just doubled your money within, let's see. This was you got in at 9:15 on Wednesday, and you got out at, let's see, 13:25. So 4 hours. When in the world have you other than Vegas, again, this is gambling to me. But you can see you have clear confirmation. You never really lost confirmation. You lost confirmation right here at about $13.21. That's higher. It told you to sell here at about $12. When you lost confirmation, you could have sold at a much higher price as it started to come down. And again, these are 5-minute candles. So KOSS is the new GameStop. And this one is just going nuts. Just be prepared. Again, I would urge you. I am not investing in this one. This isn't a long-term investment whatsoever. This is just 5 minutes. We'll go over Bitcoin in a little bit. One thing I want to point out, Savvy Trader posted this. If you're interested in Nancy Pelosi trades, you can see she sold Visa. She bought a bunch more of NVIDIA. She bought a bunch more of Broadcom. She bought calls in Broadcom. She sold her Tesla in June. She sold a bunch of Tesla. She bought a bunch of Palo Alto calls. So if you're interested in Nancy Pelosi trades, you can do that in TrendSpider. There's no reason, they track all this stuff in TrendSpider, and you can see it. It's what's happening now. I don't use it. Again, my TrendSpider is a very simple setup. I use the charts. I use the moving averages, I use the MACD, I use the RSI, I use the Bollinger Bands, I use the volume shelves, I use the watch lists, and I use the scanners. Everything else, unusual options, stock market MAC, custom indicators, all of that stuff, I don't necessarily use. I mean, the strategy, all the algorithms that I use, they're all there. And TrendSpider just extended their July 4th sale. It's on for 2 more days. Again, the standard is $49.76 a month. That is a phenomenal. If you're not sure that you're going to make or save $49.76, we just went over QQQ. It's at $4.91. You want to know when that button hooks down. And so $49.76, that's a fantastic price. Now, I would argue that enhanced is probably better. The only reason I would say enhanced is better is because you have 100 simultaneous alerts versus 30. I use the alerts, okay? And by the way, the other thing is standard has a 30-day time limit where you have to renew it, and the enhanced has a 90-day max timeline. 100 alerts sounds like a lot, but I tell you, in my portfolio where I have about 25 to 30, 40 names or so, I want the alert for buy and sell. I want the alert in order to add to my winners based on the algorithm, and I want the alert to cut my losers when it tells me to sell. Now, you can set your alerts up for anything. You can set your alert up so when the actual, say you want QQQ, when it breaks below the 9-day and has no more confirmation, you can set that up. Say you want it when the 8-day crosses the 21, which is a famous one. You can set that up. Say you want it when the 5-minute chart shows the 50 period going negative. You can set that up. Say you want it when it pulls back 5%. You can set that up. Again, alerts just mean you don't have to watch the charts. That's why I love TrendSpider, is I don't have to watch the charts. I set up my strategy, which is the 4-hour algorithm, and I put it in. I love that. I love it. So again, take advantage of that sale. And if you want to do the unusual trades, again, it's in TrendSpider, so you can do it. Now, Google. This is a stock which is a top 3 holding, I think, in my portfolio. This is a stock that has taken off as well. This is one that's in the core portfolio. If you don't know the core portfolio, it's on Savvy Trader. You can go and watch it. We talked about how this one crossed up here, was seeing a bullish tendency, and we're seeing that RSI. That RSI is extremely high, but we have confirmation. Is this going higher? Well, Deepwater Management just benchmarked the 4 key foundational models to see which one was best. Google came out the king. Is that good news for bad news for Microsoft, Amazon, and Meta? No. Remember, Google has about 92-95% in search. That's where their main revenue comes from. So this isn't a bad thing for Google. I just think that this is an opportunity for these other 3 to actually come up. They might actually take search away from Google. So is it a bad thing for Google? I think it's a good thing for Google. But I also think there's opportunities in those other 3 names. That's why they're in the core portfolio. I will post in the newsletter. And by the way, if you don't know, the newsletter is completely free during the week. It is just a paid newsletter on the weekend. But the free one, I will post this. Brian Stoffel, the reason why I'm not linking to this or showing this is because he sells a course as part of this tweet, but I will post the actual portion that I wanted. And I wanted to do this in Seeking Alpha. And Seeking Alpha, again, if you want premium, you can do this. But NVIDIA, what he posts is, look at the expansion of gross margin over the past decade in NVIDIA. It has grown incredibly. This is probably the most underappreciated metric in investing. So if we look at this, and I'll post the chart that he posted, but if you want to do something like this and you want to say, okay, let's go and look at it. We're going to go into metrics and we're going to say margin. I think they have margin. We can do gross profit margin right there. Okay. We're not going to do price return. We're just going to look at gross profit margin. And if you look at this over the last 10 years, okay, look at that. Okay. This is gross profit margin. What does this mean? Higher margins means you have a moat. No one in the market can touch what you're offering. So take a look at that. That is an enormous profit margin. How do they get it? They are owning the competition. And so this tweet right there, I will post this gross margin right here, gross profit margin. I will post everything in the newsletter. But it tells me that NVIDIA has a moat around them where they're able to price their products higher. That is a good thing. Now, if we look at NVIDIA as a whole in the Seeking Alpha Quant, it's a hold. Why is it a hold? Well, it's the valuation. The valuation is incredibly high. Again, they have a PE of 71. But when you go and you look at the PEG ratio, and the PEG prices in growth, this is price to growth. And it is under the sector. Actually under, because again, they're expected to grow incredibly high. And their profit margin is an A+. And their momentum, they're killing it. B plus for revisions, because 2 people have taken the earnings per share down, 3 have taken the revenue down. Ignore them. I think that they still have a moat at least for the next year. If we go and look at Wall Street, where does Wall Street think the price target is? 132. 3% upside, I would argue you're going to get to 150 on the next earnings. Now, how do we look at this? This is the price target that they're trailing. I mean, that's the crazy part. It has gone up. So, but I will post all of that in the newsletter if you want it. Now, there's Tom Lee. He has blocked me on Twitter because he thinks that I'm a competition. My newsletter is competition for him. I have no idea why. The guy makes millions of dollars a year off this freaking newsletter that he has. I'm not making millions of dollars a year. In fact, I just recorded my year-to-date earnings video that I will be putting out on YouTube this weekend. It won't be a podcast. It will just be on YouTube. So make sure you're subscribed on there if you want to see how much I'm actually earning doing this podcast. some people might be interested. I don't know. It's more about, hey, it's a podcast. It's a top 50 podcast. Understand, it took a long time to get here. I'm actually making some money this year, so I figured I'd put it out there. It's about transparency. And part of the issue with a lot of the financial guys is they're not transparent. I'm trying to tell you that every tool that I show you here as an affiliate, I'm using. Yes, I get a benefit when you sign up. But the reality is you can use these tools to manage and make sure that you're investing correctly. There's plenty of examples of people who write to me every day and say, hey, I got this tool. I never knew that it could change my my investment portfolio like this. Thank you very much. TrendSpider, the 4-hour algorithm, Joe has gone out there and created his own algorithms, which are doing great on some of those meme stock stuff. Scott has done incredibly well. There again, if you want, the Facebook group has a ton of people commending me. So I figured as far as the transparency goes, I might as well put out how much money I'm making. Now, back to Tom Lee. He has the thing called a granny shot stock, and it's 3 themes. It's millennials, AI, and automation. Okay? Tom Lee, according to Zip Trader Charlie, and Zip Trader is a YouTube channel who I actually watch. I think Charlie's good, except you have to just watch what he's talking about because he actually does sponsored. He gets paid by a stock to pump them up. It's not a pump and dump. He's getting paid as a sponsor to actually pump up a stock. This is not one that he's pumping up. He goes over all of the things that Tom Lee likes. And he even puts up a tweet where Tom Lee said SMCI is what's called a granny shot stock. And it's the 3 themes, millennials, AI, and automation. This is the one that Charlie is saying that Tom Lee probably has the biggest capitulation on and big kind of positive feelings. Now, SMCI, we can see in the 4-hour algorithm, just got you out with a 6.5% buy. I would argue we're setting up the capitulation right there to move higher. When you go and you look at the weekly stock chart on this, yes, the MACD was extremely high. It's quickly come down. Yes, the RSI was extremely high at 94. When the stock was up at $1,200 per share, it was trading at 94. Mind you, this is still a mid-cap stock. It is not a large company. But 94 on the RSI was too high. It's come back down to 55. And what have we done? We've gone sideways. I said this before, and you can see this clearly in TrendSpider. You don't need Gary to point this out to you. But the reality of this is you were setting up here at 262. I was screaming the entire summer last summer, buy it. Buy it. There's a gap at 350. Buy it. There's a gap at 350. I am telling you, there is another move higher in this stock. When we go over here and we look at SMCI in the in Seeking Alpha, and we go and look at the quant, let's look at the price target from Wall Street, 1,032. You're trading at 844. It's 22% upside. When you look at the quant, it's a strong buy. The issues right now are valuation and profitability. So here we go to the valuation. You can see the PE incredibly high, but again, the PEG incredibly low. So as long as they continue to grow, it's good. The profitability, this is an issue. The profit margin, again, we talked about NVIDIA having that enormous profit margin. Well, these guys just really do servers. Now, they've got some customizations on their servers where they're actually providing some cooling at the server level. Cooling in a data center typically happens, and that's where VRT comes in. It happens at a total data center thing. So you have to plan for it. You have to actually build. What SMCI is introducing is cooling at the server level. Now, I'm sure Dell, I'm sure HPQ is doing the same thing. But that 15% profit margin is a problem. Just understand, if they come in with lower margins again because they're spending money, this stock could go down. But I'd argue it is still in a baby stage. And I agree with Charlie on this one. So that's where I agree with that one. I agree with him on that. And we went over Google already. Now, Tesla. I said if you go and look at the titles of some of my YouTube videos, yes, some are like clickbait. I'm trying some things out. I'm testing some thumbnails. But I did say, hey, Tesla's going to go to 250. Well, we saw it hit 250 in pre-market. Then it opened up, and we're back down at 244. This 253 is going to be a resistance level. That goes all the way back to, I think it was sometime last year. Let me pull this back and see where we go, because I have this level back here. It goes back to August of last year. So what happened in August? We kind of shot up. We leveled around here. You can see some resistance right there. Again, you probably could put this resistance at 263. I just like the 253 right there, because we hit one section here, we pulled back. We hit another section here, we pulled back. We hit another section here, we pulled back. And then I think we're going to hit another section here. Your MACD incredibly high. Your RSI is at 90. This is an overbought stock. So what am I doing? I got asked before I started this recording, what am I doing with my parents' large Tesla thing where I said, hey, I wanted to maybe sell it when it got to 190. Why didn't I sell at 190? It had confirmation. We had strength. We shot right through that 200. Within a couple of days, we got from 200 to 250. You are trading this one tremendously. You have a couple of catalysts coming up. Yes, the deliveries were really good. But understand, I don't know that deliveries and actual revenue match what the street's expecting. You can check out Earnings Hub if you want. I'm not going to go over there right now. We can do that in a little bit because we got a couple of weeks. Their earnings are coming out July 23rd. That's when they're going to announce earnings. They also have August 8th. They have the robotaxi stuff. So there are plenty of catalysts in here. Long term, if you're looking at this stock, I do agree. Long term, this probably has some legs. Here at this price, though, with the current product mix that they have, this is an incredibly expensive stock. So you're really, and again, this one hasn't traded on PE. It hasn't traded on fundamentals. It's traded on the chart. And I even pointed out in the spaces when people were touting Tesla, I said, I don't mind you guys investing in Tesla long term, because that was the mistake I had in 2018. $65,000 for my car could have been $650,000 today. It was almost $1 million at its peak at $400 per share. So, but today it'd be worth about $600,000-$700,000. That would have been a great one. But instead, I traded in and out. Now, I didn't have the 4-hour algorithm as a benefit back when in 2018. This was developed in 2020. So I didn't have the ability to trade, but I was using charts, but it wasn't strategic. Again, in the 4-hour algorithm. And this is why you should get TrendSpider. If you're investing in Tesla, the 4-hour algorithm, over 24 and a half months, you have 22 positions. So again, it's not even once a month that you're trading. Yes, you're seeing a lot of entries here, and that's because there's a ton. But in these upward drafts, where you just get a takeoff, and you see it right here, the algorithm got you in on June 13th at 183. Did I get in at 183? No. I've said this before. I own Tesla in XLY. That's where I'm comfortable. My parents own this. But I said I'm not selling it at 180 and I'm not selling it at 170 because I will use this 140 as the support level and I will use this 200 as the resistance. But the algorithm got over, it's back tested in TrendSpider. Okay, I back tested this for 24 months. You have 22 positions. You make 193% using the algorithm, just 22 positions in and out over 24 months. Now, if you bought and held this stock for 24 months, you're down 4%. That's the benefit of having a plan and having the tools. Tesla is probably going to 300 at some point in time. But that 250 is going to be tough to break above. You can see it today. It got to 250 in pre-market. And now am I selling today because it bounced off at 250? Am I selling here at 244 as the market opens up? No. I am waiting for the algorithm to find me a place where I can trim it and then add back in. This is a stock you want to have some exposure to. Again, my personal portfolio is in XLY because 40% of that actual ETF is Tesla and Amazon. Those are two companies that I want exposure to. But if you want to trade Tesla, trade it with a plan. Understand that you need a plan. I wish I had this plan back in 2018 because I'd probably be killing it today. I wouldn't even have started this damn podcast. That's not true. I actually love doing the podcast, and that's what I say to a whole bunch. Here's the NVIDIA. This is NVIDIA is actually just got a downgrade. I mean, we talked a little bit about NVIDIA. I don't believe it. I think these guys are just bringing it down based on, and it's from buy to neutral. I think NVIDIA is just setting up, and I think it'll set up nicely. Bitcoin. Oh, you know what? I'm going to post this in the newsletter. Steve Burns had three great quotes. And I'm sorry, three great quotes that I screenshot here. And there's three great ones, and I just wanted to include this as part of the education portion. And one of his things is when traders say it took them years to be profitable, they're not talking about technical analysis, and that's the key. You don't need technical analysis to become profitable, but technical analysis adds to your ability to understand how markets move. I say it all the time. Become an expert on a stock and their chart, and you will be a better trader for that. Technical analysis is not tough. You can buy a course for $400. You can listen to me every day, and I talk about support and resistance. Understand, there's one key point in technical analysis. If you want to draw a support line, if you want to draw a resistance line, you need 3 points. The more lines you cross, the more support you have. I could draw a support line here at 185, and you can see there's some resistance there. Does that mean that 185 is a 100% resistance? No. Once you break through it, it becomes support. But we can see here, as you draw support and resistance and it becomes support, you can trade in that range. Now, the 4-hour algorithm does this for you. It just puts you in at a certain point in time based on some technical indicators. It doesn't use price necessarily, but it does use the MACD, it uses RSI, it uses moving averages. That's it. So again, I thought that quote was great. I'll put it in the newsletter if you want to read it. But when traders say it took them years to become profitable, they're not talking about technical analysis. Again, it's understanding the entire market. Here's another one. Trading is 1% talent, 99% mindset. 100% true. Understand that coming up with a plan, journaling your trades, journaling your trades, and understanding how you're trading, that is key. I just, this weekend, I looked back at some of the first YouTubes that I posted. Holy cringe. As you do things more, you become better. As you learn, you become more knowledgeable. As you prepare, you become better at things. Again, it's 1% talent, 99% mindset. I did not get to my place because, the place in the world where I am because I have talent. It's just 99% mindset. And the final quote, a lot of stress is just your ego being afraid to be wrong. I am wrong all the time. I was wrong to buy IBIT. I was wrong to buy SEDG. I am wrong a lot of the time. But we talked about portfolio management, and I am not going to win 100% of the time. I may win 30% of the time. But understanding that you're not watering your weeds and holding on to those losers, it's about when you get, if you want a dollar cost average, like IBIT's a great example. We'll go over this one and I've got some articles to put in there, but let's just talk about IBIT because Bitcoin crashed and so the ETFs crashed. And did I know this? I didn't know it when I bought it. Algorithm probably has me out. We'll see. No, it doesn't have me out. It still has me in. But I bought around the algorithm. Now, do I want to get out when the algorithm tells me to get out? I don't know if it's going to get me out. It probably will on this candle. But the RSI is at 30. The MACD is super, super low. I don't have enough data. And, this was just January that this was started as an ETF for Bitcoin. And you can see before that, it was not a spot Bitcoin ETF. It was just a futures Bitcoin ETF. So I don't trust the chart on this one 100%. But I do like that the trading wise, it's super, super weak right now. And so in my mind, I think this is an opportunity rather than a fail. I didn't add $50,000 of IBIT like I did with Amazon at I think 110 or something, or even under 100. I didn't add 100,000 of this like I did with Microsoft when it dipped under 400. I didn't do that with IBIT. And the reason is because I want to enter slowly. This is a buy and hold stock for me. So again, don't let your ego get hurt when you actually lose, because you will lose. There are many times I lose. Pins is a great example. Pinterest. I lost a bunch on that stock. I just held it. I actually forgot that I owned it. And it wound up being a winner in the long run. Again, if the story pans out, it could win. But I didn't add big. I didn't win huge. I think I won like $100 on that one, on like a $1,000 investment. But that $1,000 investment was down to about $800. So I lost a couple hundred. But I kind of forgot about it. So again, if you want to ask me about social stuff, just comment below in any platform that you're listening in, whether it's Spotify, whether it's YouTube, whether it's Apple Podcasts. You can email me on any of the social platforms, anything. You can even comment on the newsletter. Just put a comment below. You can even reply to the newsletter and just send me an email. Either one. Fatihi, I'm sorry if I'm saying your name wrong, wants to know about Uber. So Uber is one. I do think that Uber is probably an $80 stock. I think they got beaten up on their earnings last time, and I think you're going to see a pretty impressive earnings coming up. Now, the earnings are coming up, looks like the end of July. Algorithm got you in here at about 63 or so. You're trading at 70. I will tell you right now, I can see that it's using that 200-day, that red line right here. It's using that as resistance. So Fatihi, do I want to buy this one right here? I'd probably wait a little while to see where the market's going. But if your outlook is 5 to 10 years, I will tell you, if your outlook is 5 to 10 years, I like that this 50 period is moving up, and you may get a golden cross if we cross that 200-day. I do think that you're going back to 80. I think that's a realistic number. I don't think that this one is crazy. I think it's really, really good to have this in your portfolio. I have a bunch. I've been adding to it. I haven't added to it in a couple of weeks, but I've been adding to it. I want more. Now, Wall Street says it's a strong buy. The valuation, again, it's a D. So when you look at this, it's a D. Remember when robo-taxis came out? That's when this one really dipped down. But when we look at the growth, it's 0.79. Anything with a PEG ratio under 1, that's 52% below the sector. Now, we can compare this against Lyft. Lyft might be a better buy, but I'm choosing Uber because they have the Uber Eats. They have a bunch of other things. Now, when you look at the revisions, 4 revised up, 30 down. So it's not a great looking from a Wall Street standpoint. They're saying, hey, it's going down. But when you look at Wall Street, their price target is 87. That's 23% upside. So again, I think this should be in your portfolio. If you have QQQ, if you have an ETF, just make sure it's part of something that you have, because I do think this one in particular, say, Tesla comes out with the robo-taxis and that they actually, solve full self-driving. I would tell you, I tried full self-driving this past week. I still don't think it's ready for prime time. I think you're 5 years out from actually having a Tesla drive. Maybe they're going to start using LiDAR on some of these robo-taxis. Maybe he's finally going to say, hey, we can't just do it, with just vision. But, again, he's got a ton of data centers that are building up for this AI stuff. Uber's just going to license that stuff. They're going to get rid of their drivers and license it. So Uber's going to benefit as well. And they'll have the benefit of people already having the app. Not everybody has the Tesla app. So they'll have some bunch of Teslas in their wheelhouse as well. Joseph, thanks for doing these podcasts daily. Big fan. I hear you use the term trimming stock when it's high. What goes into consideration when you decide to trim? Let's use Apple. Okay, Apple's at 223. I said that Apple at 220 is going to face some resistance. It hasn't. If I saw this start to pull back from 220, I'd probably trim. And when I say trim, I don't mean you get rid of the entire portion, okay? Say you have, 10 shares of Apple and it's at 223. And you say, oh my God, I bought this at 169. You're in one of the greatest trades on Apple of all time, okay? The algorithm makes you 46% on Apple. You make 54% if you just buy and hold. I would argue this is a 100% buy and hold stock. So if you're over a year, you want in your brokerage portfolio, it's long-term capital gains. That would be my first decision about when to trim. I want to hold it in my brokerage. If it's in a retirement account, you can trade it whenever. There's no tax implications there, but check with a tax professional because I am not one. I'm just a douche on the internet. But understand, when I'm looking at it, I want Apple to be a long-term buy and hold in my brokerage because, again, the capital gains is 15% for most people versus if you sell it under a year, that's income tax, which is going to be about 22 to 26% for most people. So you want this stock to be in the lowest tax bracket that you can. That's the first thing, that the decision. The second thing that I decide is, okay, are we button hooking? So for instance, you had this one right here at 198. I sold like 3 shares. Okay. I have tens of thousands of shares of Apple. And I just sold a couple of shares. The reason was I didn't sell Apple for so long that if I actually sold out of my brokerage account with Apple right now, I would not only be in the 40% tax bracket, I would have to give up half of my money, and I would also have to pay some capital gains on that stuff. There are tax implications if I get out of this. Do I want to sell out of it? No, I want to trim it. So the button hooking here, when the algorithm tells me to get out, I'll probably just get out here. When it tells me to get out of this trade, I'll probably trim it. There's not a lot. And again, Joseph, this is part of good portfolio management. It's whatever makes you comfortable. And I would argue that the best stress test that I've ever had about trimming, if you get to this point, and we all have different risk tolerances. If you get to 200 and you're not, or 220, and you're not losing sleep over it like I'm not, don't trim it. If you get to 220 and you wake up in the middle of the night worried that your 10 shares are going to slip down and it's going to be worth $2,000 instead of $2,200, then trim it. Then cut half the lot. Because if you think it's going to come down to 200 again, and again, a lot of this is just guessing game, but you've got to look at the charts. We can go and can look at Apple, and I can tell you right now, without that iPhone upgrade cycle, this one makes no sense from a valuation perspective. None. The valuation is an F. The growth is a D. Again, they're not growing revenues year over year. But the AI and the new iPhone 16 and the new upgrade cycle, that's what people are counting on. The actual valuation, even the PEG growth, makes no sense whatsoever because they're not growing. So this one may be due for an enormous pullback. But I would argue, again, momentum is a super strong force in the market. And that's where this one has the benefit. And it is also one of the largest, think about it. I've got an iPad Pro. I got my Apple Watch. I've got my iMac that I'm recording on. I got my iPhone. I've got AirPods in the other room. Simple as that. This is stuff that I use. So again, when I look at this, I'm not worried about that. But Joseph, my first thing is, where is it tax-wise? Second thing, are you losing sleep? And what's your risk tolerance? And that's just it. Shep, are you still bullish on SMCI? Absolutely. Absolutely. I just went over it, Shep. I think SMCI is fine. I think the issue, you might pull back to about $600 if, for instance, they don't grow again. But I'm bullish. I still hold, a good 5 figures in SMCI at a much higher price too. I have a couple of lots in the $1,000 range, but I've been adding to this. Right now, it's probably going to get another MACD cross up. It's probably going to get an entry into the algorithm, and you're going to see that MACD come back up here. You're going to see it pop up again. Now, their earnings are coming out August 6th. We don't have a lot of catalysts in between then. Jeremy, I have a horrible stock that I still have long-term hopes for. I have 1,000 shares at an average price of $1.96. Whoo, that's not a good stock. Should I just stay in it or part ways? It's only about 1.5% of my portfolio. Jeremy, that is up to you. If you have long-term hopes for it, stay in it. But if you're asking a douche on the internet, should you get rid of a stock? That is my clear indication that you don't have high hopes for it. You don't. And so I would look deep within yourself and say, am I willing to lose 1.5% of my portfolio? Because I would argue that 1.5%, I would probably sell that $1.96 at the $1.96 and just throw it into Bitcoin. I mean, because here's the thing. If you go to zero on that, you've lost 1.5% of your portfolio. Your lifestyle isn't changing. Not one bit. But if you invest in Bitcoin and just leave it there, I'm almost certain that over 15, 20 years, that Bitcoin investment will continue to grow just based on what I know about Bitcoin. You can trade in and out of it if you want. But I've always told everybody that I think 5% of your net worth should be in something like crypto if you're younger. Because again, 5% it's not a lifestyle changer. But if you continue to grow it, you can do Solana, you can do Ethereum, you can do a bunch of stuff. But it should be in those types of investments that could be a 10-bagger. We were lucky enough to have Tesla in the near term. We were lucky enough to have Apple, Netflix, Meta. We were lucky enough to have, NVIDIA, those types of things in the near term. And they were great. Those were legendary moves that we've had. Do I expect them to continue? Absolutely. I expect them to continue to grow. But I think Bitcoin and $1.96, I don't know what the stock is, Jeremy, but if you're asking a douche on the internet, sounds like you're losing sleep, cut ties, throw it into Bitcoin. That would be my guide right there. But I don't know what the stock is. But it does tell me a lot that you just asked a douche on the internet. It doesn't tell me that you have high hopes. Cool Rocky Daz from Spotify, UiPath. I don't know much about this, but UiPath, UPath? What is that? Let me see. UiPath, PATS. Yeah, that's the symbol. Just so you know, cool Rocky Daz. It's Path. That's the symbol. Path is at high risk of performing badly. I don't know much about it. I don't need to know much about it. The quant says sell. Let's see why. It's probably indicative of it. You know, the company has 3-month price performance of 49%. Information sector technology median is minus 3.1. Get out. I don't know what the story is on this one, but if I just go and look at the chart on this one, it doesn't make sense. There's nothing in here that tells me that this is a stock that you do. If you're down that far over 3 months, and yeah, look at that gap. I mean, maybe you're going to fill that gap, but you got to have good fundamentals. That right now, that 200-day is moving negative. Right now, that 50-day is moving negative. Algorithm got you in at 1192. I would trade this, again, if you're looking for a strategy. I don't like stocks that trade. I've looked at this before, and I've identified trading ranges here that it broke out of, and I said the new trading range is here. You should get out when it gets below here, and that was 22. And ever since then, it's just been a nightmare of a stock. Now, are you going to fill this gap? Your valuations have to prove that. And right now, the valuation might prove it. I mean, it's got to be their peg as far as their growth goes. They have to continue to grow. But again, the momentum and the revisions are bad. Their revenue growth 22% year over year, but I don't think they're making money. And we can look at it. They might be making money. I would just, in my mind, I don't think it's worth it. I think there's too many other good things that are working in this market. Free Instant wants me to look at NVIDIA. I talked about the NVIDIA stuff, how it got downgraded. I think NVIDIA, here's my take on NVIDIA. We talked about this one where we talked about SMCI, how it provided a nice little, at 250 and there was a $350 gap. I think this one's setting up nicely as well. Look at this. Now, the algorithm got you out with a 48% gain right here, okay? Their support level at 122, it seems to have held. And it's held since, it looks like about June 24th. So it's not a super long time, about a week or two. It looks like it's held. We're gaining confirmation. The MACD is crossing up. I think NVIDIA is going for another run. Now, when you look at the weekly and you go and look at the weekly chart, where are we? We're just seeing that the MACD is still super extended. The RSI is at 76. So as for the long term, it is still extremely expensive, and it is extremely up there, and the run is crazy. So I would say anything that you can add between about 115 and 122, I would say add it. Do you want to add at 127? If your time horizon is 6 to 12 months, add it. Don't even think about it, just add it. I'm going to be adding more. And that's the way I look at it. I mean, I wrote in one of my newsletters, I want more exposure to NVIDIA. So I've been selling some, and I've been adding a little bit of this. I'm waiting for the algorithm to do a bigger buy, but I've been adding some. I'm not putting it into Savvy Trade. I'm not doing that. I've got big enough portions in those portfolios, but I'm adding this to my retirement account. So, and I've added, it's not tons. It's like 1 or 2 shares because I see this support level, holding up, and the valuation is not crazy in NVIDIA. John Pelham from Spotify. IBIT, since your last episode seems to be dropping still, share your opinions on this. Okay, here's where we're going to go. Bitcoin slumps down below 58,000 for the first time in 2 months. This gives a great example. The Mt. Gox stuff is really holding on this. The world's largest cryptocurrency fell. The exchange Mt. Gox displayed signs of activity for the first time in a month, and German Federal Criminal Police Office moved over $75 million to crypto exchanges. What they're doing is Mt. Gox declared bankruptcy years ago. They have billions of dollars of crypto Bitcoin. They're giving it back to some people, and their thought is that this is going to actually crash Bitcoin. So Bitcoin is falling. It's right now at 55,000. I added it at a wrong time, but again, I added in very small portion. Here's a great one. If you want to look at where Bitcoin is going, Van Eck did 15 crypto predictions for 2024 back in January. This is a mid-year review. A lot of these things have come true. And so if you want to know where Bitcoin's going to go further, you can take a look at this. I thought this was a great one. I think the Bitcoin halving, Bitcoin hash rate, Bitcoin all-time high in Q4, Ethereum won't flip a Bitcoin in 2024. Price ratio comparison, the Ethereum layer 2, you can look at all of these things. NFT activity rebounds, stablecoin market cap growth. Take a look at that article. It's interesting. Now, if you really want to know what's going on with Bitcoin, I thought this was probably the best thread that I saw. This was a thread on why it's happening. And he provides a free newsletter. I didn't subscribe, but I do I like his analysis. Over the past week, Bitcoin has dropped from 71,000 to 57,000. It's now 55,000, a decline of 20%. Something we haven't seen in a long time. Now, it is true. Bitcoin just became one of those things. I added, $1,000, $2,000 worth of it. I like Bitcoin long term. So am I going to add to IBIT? Absolutely, I will add to IBIT. But this goes over the 4 or 5 things that have really happened to Bitcoin and why it's falling. So I like this one. I thought it was a great one. And you can find the link for that in the newsletter. Let's see. Joshua Engel. CEG and VST nuclear energy can fuel the AI drives. I would say, it's funny because NNE, that's nano nuclear energy. This was brought up to me last week. This one is up another 16% today. That nuclear energy, I was completely wrong. I completely apologize to this listener who I said, I don't like it, man. It is what it is. This has just been a monster of a trade. A monster of a trade. And you're right, Joshua. Nuclear energy can fuel the AI drive. So we can look at Constellation Energy, which is CEG. This is more of a utility, I think. I think they'll do fine. I think any energy company that you're buying, you can see on the 4-hour algorithm, the 4-hour algorithm makes you 122% in this name. Now, if you bought and held this name, it's 243%. But again, if you want some safety in your trades and you're actually making money, this is the way to do it. This is the way to sleep at night, knowing that, hey, I'm still going to make 122% on this high-flying name. Maybe it'll make 243%, but I want to protect myself from some downside. Well, here it is. Now, the algorithm will probably get you in on this candle at around 212. You can see the last one where it got you in at 218, it was a loser. This one, when it got you in at 195, it got you in. I would say if you want to just buy and hold this one, you can probably buy and hold it. It is an extremely, extremely expensive right now. I shouldn't say expensive, but it's high flying. Look at the MACD. It's up at 22. That's above the oscillator. 22 above the. I get nervous when things are like 9 and 10 above the oscillator. The RSI is at 58, 62 in no man's land. It's coming off. So this one may have more room to run. We can go and look at the valuation of this one. CEG, Constellation. Oh, come on, symbols. CEG. It is a hold in the quant if we want to look at that. The factor grades, the valuation's an F. Their growth is an A. The profitability is a D-. Why is the valuation F? Well, it's got a PE of 31. Your sector is at 16. Now, they don't give forward guidance, so you don't see the peg. When you look at the growth, it's an A+. How are they growing revenues? They're actually losing 10% revenues year over year. That's not real great, but their EBITDA growth is 91%. So that's how they get the A. Now, when you look at the profitability, that's where it comes in. The gross profit margin on Constellation Energy is 17%. Sector is 44%. I would look at other names. These are electrical utilities. You pull up the quant and you can say NRG. NRG is a great one. You can look at Southern Company. That's who provides me energy. They just opened up a nuclear plant here. So Southern Company looks like a better buy in the quant. That's just the quant. VST is one. VST is another one. I would argue VST is probably a better name for you to invest in. It's a hold in the quant as well. But the only reason is the valuation. Now, these guys, the stock has exploded. They're not making money. They're PE, but they're expected to make money. Once these guys turn profitability into actual earnings and income, this will pop. Now it's ranked number 2 out of 6, and this is independent power producers. CEPU, which is Puerto SA, is the number 1, but VST, I would argue, is probably a better one for you to invest in. So, and VST stock, I mean, if we just look at VST on the symbol here, I think I've gone over it before. The algorithm, let's see, the algorithm makes you 186% over 24 months versus 269%. You make, let's see, you win 33% of the time. Again, you only win 33. We talked about the ego thing. This only wins 33% of the time, but the average win is 24%. It just got out of making you 112% right there. Oh, we've got to pull I don't know what this was. Oh, that was divergence for something. Yeah, so you can see it's up 48%. Since then, it's pulled back. You're setting yourself up for another move higher in my mind. I don't think that this one, the valuation's not out there. When they start making money, this is one that you probably want to be in. Now it's at $90. What's the actual price target? Let's see. If we go to VST and we go to Wall Street, what's the Wall Street price target on this one? It is a buy from Wall Street. There's 10 analysts that cover it, so it's not tons, but their average price target is 108. 108, that's a 20% upside from where you're trading today. So look at the weekly, and the weekly is kind of putting in a nice little shelf there. Now, the MACD has just crossed down on the weekly. The RSI is at 67. You might want to wait for a little bit. You might look at like 8 in the 80s. If you can get this in the 80s, that might not be a bad buy. Because again, you do have some support down here at about 82. If we were to pull this, let's pull this back. I'm going to pull this on the weekly, this volume level. We're going to pull it to where it kind of started to break out here. At about March 6th is where it really kind of, you see the shelf right there, and then we took off. Now, these volume shelves show you, even though, and the reason this one shows up, maybe that's not fair. We're going to pull this to about here, and we're going to see where the volume shelves are, because this one really started to take off. And you can see there's not a huge lot of people that are buying up here. There's enough between 85, but if you break that 85 level, I think you're going down to 70. And you can see right here, those little candles. So it's clear, anything that you can get between 70 and 85 might be a good entry point for you if we continue to show weakness. But that 85 level looks like it's probably a pretty good support. So there you go, Joshua. Good call on that one. Scans, there's too many scans to go over. I mean, we got XLK, we got FBCG, we got a lot of stuff in the core portfolio. If you want to see these scans, again, just get TrendSpider. You can do the scans yourself. You can pull them all up. Now, if you want to see the scans and then chart them yourself on your own thing, just go to the newsletter. Okay, this is Wednesday's newsletter. You go down here to the bottom, and I post all of them. Okay, all of these scans I post. In fact, Wednesday, Powell had a cross up at 145, and we can look at that. That one's on the list again today. But it's just a 100% list. I don't post the charts for everything. You'll have to do them yourself. If you want me to post a chart, you just ask me. But POWL is on the list as well today. We can look at that one. This is probably just another cross up here. The POWL is trading at 148, so it got you in at 145 on Wednesday. You're showing some confirmation. 146 is where it got you in. You're showing some confirmation. Your MACD is crossing. Your 50-day looks like it's still moving negative. Might be setting up. If we go and we look at the weekly, this one has run quite a bit, but it looks like you probably have a nice bounce there at 130. So if you want to add at 148, it's probably not crazy. Probably not nuts. I mean, your MACD is a little bit high, but again, if you're looking long term, it's probably not nuts. AVGO, that's a Nancy Pelosi buy. I also own this one. This is Broadcom. This is going to be an AI winner as well. In my mind, this is number 2. Now, the valuation's a little bit crazy. We talked about how this one was setting up for a nice move higher. You can see 1729 is where it got you in. Wouldn't it have been nice to get in here at 1500? Yeah. But the MACD reset itself, crossed up, RSI quickly moving up. If you want to join Nancy Pelosi in the episode, we have a bunch of covered call ETFs. The only name in the energy was EQT. We have a ton of leveraged ETFs that got entries in the algorithm. TQQQ, this isn't an entry. This is basically telling you that TQQQ is going for another run. Okay, the MACD reset itself. The RSI reset itself. Where's it going? Well, we got in here at 67 on June 6th. $67. You're at $80 right now. That's a great run. Again, this one makes you 138% with 23 positions over 24 months. This is not day trading. This is a 4-hour candle. So it's 2 candles per day that it's giving you. This is just a great, great tool. And again, if you want it, take advantage of the TrendSpider sale. The other thing that I've shown you is Seeking Alpha Premium. And so how do you get to all these? Well, you go to my link tree, linktr.ee/daily stock pick. The top one is TrendSpider. You'll get the best offer available. The second link is for Seeking Alpha Premium. This gets you 20% off and a free 7-day trial. You saw me using the quant. You saw me scoring these stocks. You saw me looking at which stocks in an industry might be better. That's all Seeking Alpha Premium. Now, if you don't want to do any of this work, okay, there is a special July 4th sale still going on Seeking Alpha, the Alpha Picks portion. These are 2 data-driven stocks per month. You get one on the 1st and one on the 15th, and they tell you when to sell. That's the key. The key is they tell you when to sell. So it's a portfolio where you can buy and sell on your own. You can use this as ideas. The majority of these stocks I had no idea existed. There are around 10 of them that have performed over 100%. I think SMCI, they discovered SMCI in November of 2022. Okay? That stock is up almost 1,000% since then in their portfolio. They've trimmed it several times because it's become too big of a portfolio percentage, but they have continued to be hey, SMCI, it's a great return. You can see right here, I think at this point in time, it was like 968% gain. So again, it depends on the time that you look at it, but all the gains are measured from July 1st, 2022 when the actual portfolio started. But it's 121% return versus the S&P at 43%. Again, this is a special July 4th offer. It gives you, I just talked about Seeking Alpha Premium. It gives you 30 days of Seeking Alpha Premium for free. These are 2 separate subscriptions. Alpha Picks is one where it just gives you ideas. One on the 1st, one on the 15th, tells you when to sell. Seeking Alpha Premium is you doing your own research. So the 2 work really well together. If I had to tell you which ones to get on my platform, I would tell you the first one is TrendSpider. I can't trade without it. The second one is Seeking Alpha Premium. But again, if you have some money laying around and you want to just get ideas, I think Alpha Picks is a fantastic one. So if you have any questions, hit me up. I will talk to you Monday. Subscribe on YouTube because I will be putting out that money, kind of how much money I made through the first 6 months of this year. And it's kind of broken down between subscriptions and affiliate and ad revenue. You'd be shocked at how little ad revenue I get. But, again, for a top 50 podcast, you can't make money off that. But, again, if you have any questions, hit me up. Okay, take care. Bye. Zephin, welcome back. Zephin's an OG. Zephin's in California. I even give you a shout out, I think, on the money one, Zephin, where I, not you specifically, but the California folks like you, Joe, and others. Oh, Lucas, I think you're my number one fan. I think you probably have about 10 devices that probably count as 20,000 listeners for me. NVIDIA's one where I hate to quote Jim Cramer, but it's kind of, I love it. Oh, Nantucket's so nice, Zephin. I know you're fishing up there. Hey, careful of those great whites. I got a friend with a house on Nantucket. And those great whites are no joke. They're cruising around up there. But McLaughlin, NVIDIA is one I just wouldn't trust myself to add back in. I sold this. Here's a story for you. I sold this at 500. Thinking it was going to, and it did pull back. I sold it at about 500, right about, I think here. And it was going for a run. And maybe, was it January? I don't know. Maybe I sold this at 600. I forget. I didn't get back in. So, Oh, Portnoy's got a killer house up there, doesn't he? Portnoy's got a he was doing the DDTG stuff from in there. I gotta tell you, Zephan, I like him as an entertainer. Working for him, holy hell, that's got to be hell. He's an interesting character. And Snow, yeah, Chris is always right. Chris is a killer trader. Chris is managing well, but yeah, I mean, it bounced off there for Snow at 130, and it's. I mean, the 50-day is starting to move positive again. Here, Laurel. Here is your trading range for if you get nervous about 160, you can start to trim if you wanted to, but I'd say you wait till 200. And fishing is awesome there. Okay, it's 10:17. I've got to go. I'm going to put out the newsletter. Zephan, always good to have you. Everyone else, always good to have you guys too, even if you're quiet. Yeah. I mean, today, let's do an indices check. Let me see. Okay, let's see. My personal portfolio. Zephan, I'm not up 40% year to date. My portfolio got killed by Apple. And while Apple's doing well right now, it's actually helped, but I'm still not. Wow. Apple must be killing it. Microsoft's killing it. Yeah, Apple's killing it. I'm up 1.3% in my portfolio. My total portfolio is 1.3%, and that's huge. That's a nice... Yeah, that's a very nice 5-figure day. No, nobody's always right. Oh, you're welcome, Blake. I'm just shocked. I mean, listen, things are going really, really well. And it's continuing to go up. The market's in a good place. I mean, overall, is Palantir soaring? That 25 provided a good, 4.62%. I think, here's my take on this, Chris. I think Snowflake, Palantir, CRM, I think all of those, they put in a nice bottom. Palantir didn't sink as much as the rest of the software over the past month. Palantir put that 25 support level to work, and I think you're going to see the move to 30. I think this is the move up to 30. I don't own Palantir outright, but I do own I own it in some ETFs, I believe. God, McDonald's always tells me that I've got they have the best soda. Oh, they have got the best soda. Okay, I'm out because I got to put all this together. Plus, I have to edit that damn video that I'm doing this weekend. I will talk to you guys later. Paid newsletter subscribers. I'll have a pretty good one. What am I writing about this weekend? Let me see. 5 Trading Rules by William O'Neill. CanSlim. CANSLIM. That is part of his thing, but it's 5 Trading Rules from William O'Neill. So I'm writing about that one. And it's fantastic portfolio management. But yeah, I like it. I like it a lot. So I'm going to write about that because we're at that point where, we're at all-time highs on a lot of stocks, on a lot of indexes. And I think some people are getting nervous. I like seeing my account grow. I like seeing my account up here, but I do want to get better. And I'm not very good at protecting my my asset, my portfolio balance. I'm better at making sure that I am in the right places and letting them run, but sometimes I just let them run too much. And so when you see that violent pullback, I'm not good at protecting on that side. That's a fantastic buy. And yeah, I mean, if you're down at 16, you're in this freaking gap. Well, 1689 is where it started. But that's a great one. My Chris, I'll tell you a funny story. I think my parents would be screaming, get out, you've got to pay taxes on all of that. That's the logic that I grew up with. Was, oh my God, you made so much money, you've got to pay taxes on that. You're going to get killed. It's glass half empty, glass half full. Is that they're not looking at, oh my God, you did great and you're going to make money. It's, ooh, you got a lot of taxes to pay. That's the wrong kind of thought process to make. I do want to optimize my taxes. So, hopefully that's long-term. It probably is long-term because you're probably, I don't know if you started adding just in January, but hopefully you were adding throughout the year, because if you look at the weekly on this one, that 25 that I said, hey, this 25.14 was where I really put it. Valuation is a little tricky on, I'll tell you. I mean, I don't argue that Palantir and Tesla aren't good companies that won't grow into this stuff. But the value, I mean, that just, even the PEG ratio, they're going to have to grow more than is expected. Now, is that possible? Absolutely. Absolutely. But you can see, capital structure. And Seeking Alpha is so good. Yeah. Okay. I'm out. I got to go edit all this together. Okay.